Hello, everyone, and welcome back to Way to Rich channel. Today, we have an exciting topic that's close to the hearts of many people. Tips for first-time home buyers. Owning your dream home is a significant milestone, but it can seem like a daunting task, especially with the ever-rising cost of housing. But fear not. In today's video, we'll provide you with valuable insights and tips to help you navigate the journey towards homeownership. Most people dream of owning their own house. It's a place where you can build memories, create a haven, and call it your own. But the journey to homeownership can be challenging. The rising cost of housing has presented new hurdles. However, here's the good news. You can achieve your dream with careful financial planning and the right information at your fingertips. I will break it down into 3 tips. 1. Critical choice. 2. Other possibilities. 3. Alternative perspective. Number 1. Critical choice. When seeking a new home, having a carefully devised financial plan and a substantial initial deposit is essential. Here are some tactics to assist you in acquiring your first home while staying within your budget. A. Building a complete household budget. To start, let's break down the process. First, calculate your monthly income after taxes. Then, match it to your monthly expenses. The goal here is to ensure you have a surplus every month. It's worth noting that despite the dream of homeownership, 64% of Americans still live paycheck to paycheck. But that doesn't have to be your story. If you find that you don't have enough to set aside savings each month, don't worry. We'll work through your budget together to see if there are items you can cut back on. With diligent budgeting, you can free up funds to put towards your home buying goal. As part of your budgeting process, you need to determine what your target amount is for a down payment. Start by looking online to see what housing prices look like in your area. This will give you an idea of the down payment goal you should set for your specific circumstances. B. Calculating the initial payment. Let's get started with the basics. A down payment is the initial sum of money you pay when purchasing a home. Ideally, you want to aim for that magical 20% down payment. Why, you ask? Well, it's because lenders prefer it. This percentage provides lenders with a safety net in case you can't make your mortgage payments down the road. It gives them confidence in your financial stability. Now, here's the real kicker. Your down payment amount directly influences the maximum price you can afford for your dream home. If you're committed to that 20% down payment, your down payment funds will determine the maximum amount you can spend. It's a crucial factor in narrowing down your options and finding a home that fits your budget perfectly. So, how do you work towards that 20% goal while building up your savings? It all starts with financial discipline and setting realistic savings targets. Cutting unnecessary expenses, creating a dedicated savings account, and exploring government assistance programs are excellent strategies to accelerate your savings plan. Number 2. Other possibilities. There are mortgage variations designed to accommodate specific consumers with unique circumstances, and it might be prudent to contemplate the following options. A. Federal Housing Administration (FHA) loan. Let's start with the basics. FHA stands for the Federal Housing Administration, and FHA loans are a fantastic option for first-time homebuyers. These loans are backed by the FHA, which means they come with some unique benefits that make them particularly attractive to those just starting their homeownership journey. One of the standout features of FHA loans is their lower income limits and borrower requirements. These loans are designed to assist low to moderate income borrowers, making homeownership more accessible, even if you have less than perfect credit. Now, here's where things get really interesting: the down payment. With FHA loans, you can secure your dream home with a minimum down payment as low as 3.5% of the home's value. Yes, you heard that right, 3.5%. B. Military veteran loans. The first thing you need to know is that if you're a military veteran, you may qualify for special Veterans Affairs loans or grants that offer exclusive rates and terms on mortgages. These programs are designed to give back to those who've served our country and can make homeownership a reality, even if you're a first-time buyer. One of the most significant advantages is the availability of mortgage products that require no down payment whatsoever. The fact that VA loans can be obtained with no down payment is a game changer for many first-time homebuyers. Imagine being able to purchase your dream home without having to save up a substantial down payment. It's a fantastic benefit that can help you get into your new home sooner than you might think. If you're eligible and interested in taking advantage of VA loans or grants, the first step is to connect with a knowledgeable VA-approved lender who can guide you through the process. They'll help you understand the specific benefits you qualify for and assist you in securing the financing you need for your dream home. Number 3. Alternative perspective. You've probably heard it before. The magic number for a down payment is 20%. And while it's true that having 20% down can open up a world of mortgage repayment options, it's not always realistic for everyone, especially first-time homebuyers. So, let's bust that myth right now. The good news is that if you can't come up with a 20% down payment, you don't need to worry. Many lenders understand the challenges that first-time homebuyers face, and they offer flexibility to help you finance your home purchase. Let's explore some of the options they provide. One popular option is low down payment programs, which can require as little as 3–5% down. These programs make homeownership more accessible, and you won't need to drain your savings to get started. A. Paying for private mortgage insurance, PMI. PMI, or private mortgage insurance, is like a safety net for lenders. It's there to protect them in case you can't make your mortgage payments. But the downside is that it adds extra costs to your monthly payments. C. Instead of a big down payment up front, homeowners purchase an insurance policy. This policy compensates the bank if you end up defaulting on your loan. The good news is, PMI isn't a life sentence. You can get rid of it. Here's how. PMI sticks around until you have at least 20% equity in your home. Equity is the portion of your home that you actually own. So, how do you reach that magical 20% mark? You can do it by making regular monthly payments, making improvements to your home, or experiencing an increase in your home's assessed value. It's like chipping away at a financial goal. First and foremost, save for a larger down payment. The more you put down up front, the less you'll need to borrow, and that means no PMI. Second, explore different loan options. Some loans, like FHA loans, require lower down payments but come with their own mortgage insurance. Be sure to compare and choose wisely. And third, consider piggyback loans. These involve taking out two loans, one for 80% of the home's value and another for the remaining amount. It can be a bit complex, but it can save you from PMI. B. Optimizing your wealth. As you begin your journey towards homeownership, one of the first things to consider is saving for that all-important down payment. But where should you keep your hard-earned money? Well, here's a crucial tip. You want to ensure your savings are both safe and accessible. Avoid the temptation of risky investments. Instead, opt for a reliable, interest-bearing savings account or a money market account. These are not only secure but also insured, unlike other investment options. Now that you've set up your savings account, it's time to start building that down payment fund. Here's a practical strategy. Begin by reviewing your finances and creating a household budget. This will help you identify unnecessary expenses that you can cut back on. Remember, every dollar saved gets you one step closer to your dream home.